Hello and welcome to another update video about AGIX. At the moment the market is rather just moving sideways, consolidating, a bit boring at the moment. That's completely normal in these corrections. At least nothing unexpected from an Elliott wave point of view. Bitcoin, Ethereum, they were supposed to be in these corrections. Drag basically many of the altcoins with them in these current corrective structures, and you know that's just what happens in these corrective pullbacks. It's a bit boring, it's a bit up and down, no clear sense of direction. People say it's manipulation. It's just normal corrective behavior. So at the moment, I'm still watching for basically two scenarios, okay? There are three scenarios on the chart. The most aggressive one is actually this, or the most directly bullish one, and now I have to go back to the daily chart again, is this white count. You see 5 waves to the upside. Wave 1, wave 2, this here is a wave 3, should reach $10.50, then a wave 4, and a wave 5 that could even reach, I don't know, $21. How realistic is it? I don't know. It's possible, but I would rather see other scenarios as more likely. For example, in the orange count, a top could already be in, but yeah, but you know, I won't believe that until we break below support, which is at 59 cents. So my preferred scenario is actually the yellow count, which is an A, B, C structure. And in the C wave, we might need one more high. And then we have to see where we are, you know, but the potential is that the next high could form a more substantial top. And what happens after ABC tops? Uncertain. Okay, so it could be that we go to completely new bear market lows. It could be that a long triangle pattern is forming, okay, which would be very frustrating. It could be that an ABC structure morphs into a larger ABC, like ABC. All of this is an A wave, then we get a B wave pullback. Also, that would be a decent pullback and a C wave rally. So again, I can only highlight that there will be an important juncture after the next high, but I will not confirm a top in place until we have at least a break below micro support. So at the moment, if we go back to the 4-hour or maybe even 1-hour charts, this is the correction that's currently unfolding. Looks very similar to what, for example, FET is currently doing. I suggested in a previous video that we might be in this WXY correction in the yellow count here. This is a wave 4. The support area is defined between 59.2 cents and 95.5. Shouldn't be a surprise. And yeah, we might still see a little bit lower. The price go a little lower. We have this descending, broadening wedge pattern. Usually they tend to break to the upside eventually. At the moment, the market is still trending down. Lower lows, lower highs. Market is getting increasingly choppy. That's just what, you know, these descending, broadening wedge patterns characterize basically. But it looks definitely like corrective behavior, and that would suggest trend continuation to the upside. Because whenever you get this overlapping price action, it suggests that, yeah, this is just part of this pullback, the correction that's correcting as a counter trend move, the move to the upside that occurred here between January and basically March. Now, if we then dive into the microstructure of this correction, best I can tell you is that we had a wave W that bottomed here on the 15th of March. This is an X wave to the upside, and then here was an AB, and the C wave down would complete the Y wave. That's at least one possible interpretation. Technically, in the support area, the price is spaced all the way down to 59 cents. That's key support, and just above that, we've got 73 and 95.5 cents as relevant support levels here in the orange support zone. Where exactly it's going to land is a bit uncertain, but what we can do, we can calculate that based on the length of the A wave. Then we go to the high of the B wave. I mean, that might still stretch out, but assuming the B wave might have topped, I would be focusing on the area between 81.8 cents and 66.6 cents. It's the area between the 100% extension level and the 1.618 extension. Just a very common target area for that C wave. And that's what I would focus on. And then typically the ideal target for a fourth wave is the 38.2 retracement. It's here at 73.4 cents. That's definitely what I'm watching here. We're also dealing here with, as I said, a larger degree support area with, an additional area of interest, basically as a target for wave C. Yeah, but I can't confirm that a low is in place until I see a first signal, like, for example, a break to the upside of the descending broadening wedge, to the upside out of the upper boundary line, basically. I mean, that would help. A break above the B wave height, that top, that would help at $1.14. So we just need a little bit more patience until this correction is over. And it might go on for a little bit longer, but it's already been going on for, since sort of early March now. A couple of weeks, can carry on a bit longer, absolutely. I mean, this correction has the potential to maybe even move into or morph into, work its way into April, basically. For example, the wave 2 lasted like a month. Oftentimes a wave 4 has roughly the same length. We'll see. But that's basically my update about AGIX. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.